Thank you guys so much for coming to our first home buyers seminar. We're so excited that you're here. Our goal is for you to gain a lot of information. Probably going to feel like you have drank from a fire hydrant a little bit, but it at least gives you a basis of the process and everything like that. So we are going to, I'm going to say a quick prayer for us, and then I'm going to introduce our speakers, okay? All right. Dear Lord, we just want to thank you for allowing us to come here tonight, Lord, to learn more about the home buying process, Lord, so it can give us some information, gain some wisdom and insight, Lord, and hopefully calm some nerves and everything, Lord. We just thank you so much for all that you do for us, and that you would guide us along this journey. In Jesus' name, amen. So we're going to bring up Robin. She's our first speaker tonight.
All right, I'm Robin, I know most of y'all. I am a full-time real estate agent. And one thing I learned that really stuck with me a long time ago from Dave Ramsey was never to give someone control of your money who doesn't have the heart of a teacher. So I definitely think that the three of us that are here tonight have the hearts of teachers. Like, we don't mind answering questions for you. Sometimes, you know, you go buy a car, you go invest your money somewhere, you get people that don't really want to answer questions or don't want to educate you, and we're really passionate about doing that, and answering your questions and making sure that you understand the entire process. So you guys are here because you've made the choice pretty much already. So you've taken the first step. So the next step is choosing your team, okay? Y'all probably know us, so maybe you've chosen us already, but we hear a lot like, why do I need a lender? A lot of people want to start looking for homes before they talk to a lender. So the reason that you need a lender first, I mean, you can kind of do it at the same time, but the reason you need to be pre-approved first is because the lender is going to tell you how much you can afford. You know, they go over all your finances and everything. But also make sure in that process that you tell them what you can afford. So just like when you're buying a car and they say, you can make an $800 car payment, and you're like, no, I can't. That's not what I want to pay. You know, you also got to keep that in mind. So if you're paying rent right now and you don't want to go over your rent bill or whatever, you know, you just got to let them know what that is. Deena's going to talk more about why you need to work with a realtor, but honestly, I feel like it's like if you need an attorney and you represent yourself. Like, there's so many things that we do behind the scenes that you really need a realtor, whether you're buying or selling. It's really important. All right, and then the next thing is just finding the right home. Just have a lot of patience. It depends on what your budget is, what's out there right now. It is a good time to buy. There's less, like a year or two ago, it was kind of crazy and we were having outbidding and things like that. So it's not quite like that. It's a lot more laid back, and you can look and find something that you really want. But just remember, like, sometimes we'll have somebody that picks the first home that we go to, they love it, and then sometimes it takes them 30 times. So we don't mind doing that. We don't mind helping you find the right home, but you know, it's a big investment, so you don't have to be in a hurry at all. And then once you find the right home, you're going to make an offer. All right, I'm going to talk a little bit more about that part. So once you turn in an offer, depending on if there's other offers, you know, you may negotiate, you may go back and forth, and you're going to hope that your offer gets accepted, right? So I'm going to kind of talk about what happens after that and what goes into the contract. So when we do your contract, we have to know what you're wanting to pay for the house. A lot of times what we do for our clients that need it is we try to get the seller to pay part of the closing costs, which really helps you guys out. Like, you know, when the lender tells you what you're going to have to bring to the table, it's helping you to bring less money to the table. So your due diligence is the time frame you have between when you sign, when the contract is bound, and the date that you can get out of it. So usually we do 3 to 5 days usually. It depends on how fast we can get an inspector. You're gonna wanna have an inspection in there. An inspection is, I won't say required, but I've never had anybody decide not to do an inspection. It's just really important. Like, you need to know what's going on in that house. So an inspector goes through everything in the house, the electric, plumbing, anything you can think of, in a lot of detail, and they do a report for you. Okay, at that point, what we do is, an inspection's kind of scary. Like, you know, when I bought a house and I got my inspection report back, I thought there were, oh my gosh, like the house is gonna fall down. You know, it's not gonna fall down. Some of the stuff was like a drawer was loose, you know, things like that. So you kind of got to think of it too. It's not a brand new house, unless it is. So if it's not a brand new house, there's things you're going to have to do along the way to fix the house up. But there are some big things that you do, like if there's a major roof problem, a major plumbing problem, or anything like that. That's when we negotiate also. We negotiate in the beginning, and then we negotiate when it comes to the inspection. We require them to either fix it or give you more money off your price or towards closing costs. So the inspection, it does come out of your pocket. It's something that you have to pay right away. The earnest money is also something you have to pay right away. So a lot of people don't know that, but first thing within like the first week, you need to go ahead and be prepared to pay those two things. Earnest money is generally about 1% of the purchase price. So if your purchase price is $100,000, you need to put down $1,000. If it's $200,000, $2,000. That makes sense? So it's not like putting a deposit down, because when you get to the closing table, they give you your paperwork from the attorney, you'll see that it just comes off at the end. All right, so that money goes towards the purchase of your home. And really the purpose of it is just to say, I'm committed to buying this home. So if within those few days you have an inspection and there's something that y'all can't work out, they don't want to repair something or whatever, you can get your earnest money back. That's the whole point of the due diligence. But you can't get the inspection. The inspection is just something you have to pay. All right. All right, and then when we get closer to closing, we have an appraisal, and that is just telling you if the house is worth what they're asking for it and what you're paying for it. And so that's also a negotiating tool. If the appraisal comes back and it's not, they don't value it what you're paying for it, especially certain loans, they're just like, no, you're gonna have to bring the price down and renegotiate. So anyways, that's just an important part of the process too. You do that with your lender, so I'll let Michael talk more about that. And then you're at closing. So you're at the closing table, you're at the attorney's office signing a whole bunch of papers. It's crazy. Like, most people that are doing it the first time are like, I have never seen this much paperwork. You're just gonna sign. They go over everything with you. They're happy to answer your questions at the attorney's office. And then you have your keys and you move in. Any questions? All right. Michael's going to come up next and talk about the lending process.
I appreciate everybody coming. Also, feel free to ask any questions throughout the process. I always tell people, no question, bad question. So, and Robin was mentioning in the process, the first step is either whether you get in touch with Robin or Deena folks, you get in touch with myself to make sure that we can understand and have an idea of exactly what's your budget. One, what your budget is, what is your sales focus from the sales price, but also what do you, the big picture of everything involved from buying a house, for down payment, monthly payment, and those things. So really, that's the first step, and that is the pre-qualification process, which we look at your W-2s, pay stub, asset statements. It's basically 2 months. So 2 months of bank statement, 2 years of W-2s, 2 pay stubs. To be able to say, okay, this is exactly what we have to work with. In addition to that, when we are doing the pre-qualification process, we will also, as we look at your asset, for how much money you have for down payment and how much money you have for closing costs, we will look at that depending on the loan program to be able to go to the seller when you're making an offer to determine, okay, how much can we ask them to pay for closing costs? So we try to, I feel like right now we're in more of there's not as much inventory in the market, but we're being able to be more selective as a buyer and as we're going to make an offer to be able to ask for closing costs to make it where you're bringing the down payment, but somebody else is helping you with the closing cost, and Deena and Robin can definitely help you with that aspect. Then as far as rent to buy, a lot of folks, the interest rates the last couple of years went up a little more than they were a couple of years ago. I bought my first house 20 years ago at 9%. The average over the last 30 years is actually higher than what the rates are now. We always have the opportunity to refinance once you're in a home, as opposed to if you continue to rent. Let's just say you're paying. I was out at one of the new apartment complexes last week, and the rent $2,300 a month. You're giving $25,000 to somebody else on a yearly basis when you're renting. So if you feel like it's the right time to buy, definitely looking and not necessarily look at what your budget is, but more importantly, what is your comfort level on a monthly payment standpoint when it comes to what you want your mortgage payment. And then we can back in those numbers and be able to look at it and also say, okay, what can we do to get you the opportunity to buy and keep that payment on buying close to what you were for renting or lower or whatever your comfort level is, to make it where you're now getting equity in a home over time. And recently, the last couple of years, it's been 4 to 6% equity in a home. So if you all of a sudden buying a house for $200,000, you get in a year or so that house could be worth $210,000, $215,000, as opposed to you paying $2,000 a month in rent and you're giving $24,000 to somebody else. I'd like to say, going down Lafayette Parkway, roll the window down with the $2,000 in cash, and the landlord behind you smiling because he's catching. Well, you're getting no benefit. So over time, it can bring value and equity to your home and to yourself from a financial picture by being able to buy if it's the right time to buy. And then also, as far as down payment, a lot of the myths out there is that you need to have 20% for down payment. And that's not necessarily the case. Being in LaGrange, being in Tripp County, if you go out past the mall, you're almost in USDA, which is 100% financing. So a lot of, and going out toward the road, actually, we're going to wing to is out Hamilton Road and out past Hooters on Hillsfield Road, and then also going toward West Point. There's a lot of those areas that you can be 3 or 4 miles out, 3 or 4 miles from the square, from where we are now, and be able to be in USDA, which means that you can get 100% financing and not have to bring money to the closing for a down payment standpoint. And then all you have to do is bring your closing cost and have the seller pay your closing cost. I had a deal with USDA a couple years ago where the borrower actually got a check back for $500 at closing because he paid his own money. They covered his appraisal, and then when we closed, because he was getting 100% financing. So you've got the opportunity to be able to go 100% financing. Also, there's FHA and conventional, which FHA requires 3.5%, and then conventional, we do have conventional programs at 3%, but most of those are 5% or less. So really, the goal is to really look and say, okay, what is our payment plan? What is our payment focus? And then we can work the numbers based off of those numbers to determine what is your best option. And then also, as far as you get the down payment, you also have the loan size. The loan size is really, the way I like to look at that is more, I don't like to look at the loan size, but I like to look at what is our payment goal for our budget. And then we can work in the number to based off the market. Because if you find a house and Deena and Robin say, hey, we found this house in the market, let's go look at it. If you tell me what the address is, I'll go find out what the taxes are on the tax. on the tax record. I'll also go to your insurance quote. So when we're putting everything together, we have a real concrete idea of what your closing cost and what your payment's gonna be, as opposed to a lot of lenders out there that just want to throw an estimate, but then they throw a bunch of cowballs at you once you get under contract, and it kind of gives you and not be prepared. So I like to try to get as much of that stuff for each property. I don't care if I do it for 10 properties. I got some insurance agents that I work with, and they have no problem. I go to their office, sit down with them, say I need an insurance quote for this property, and then we get those pretty quickly what we have in the system. So I want to look at what that goal is for you, and really continue to focus on your payment focus and not have you worried that you have to, I'm trying to get this or that. No, look at what your payment is, and then we'll go work on numbers based off of what you're trying to accomplish. So as far as the loan size, so basically what you have for one of the expenses, your debt to income ratio. Your debt to income ratio is basically what your monthly income is in relation to what your mortgage payment is, and anything that's on your credit report, and it's not the balance. It's what your monthly payment is showing on the credit report. And then also, if there's anything not showing on the credit report, but it happens to be showing up consistently 2 or 3 months in a row on your bank statement, then they're going to count those things as well. So when you take those things, and then your income divided by what your expenses are, that's your debt to income ratio. So you want your debt to income ratio to be on conventional less than 50%. If you go FHA, you can go to 56% depending on the credit score. But I like to really stay in that 42 to 48% because you're gonna have groceries, you're gonna have utility bills, some of you may have daycare, other things that you want to make sure that are also going out, that you don't want to be top heavy on your mortgage payment. That it gets you stressed out. I want to make sure that we're focused on when you get into a house, that 6, 12, 24 months from now, you're still comfortable with that payment and not getting worried based off of different things changing. So that's what the debt to income ratio is for that. Also, another question a lot of folks have is about credit score. So a lot of folks think, oh, I have to have public credit. Now, we have programs, if you put 10% down, we can go down to 500 credit score. I don't recommend it because it really limits the number of folks that you can, a number of lenders that I have out there for that program, and also the rates are much higher, but that is an option. Really 580 and higher is really the point for credit score, and the credit score can go up to 830. So that's really more of what we're going for when it comes to your credit. So we're looking at the big picture in that whole qualification process to really go back to focusing on what your payment is, what your comfort level is, and a lot of times you can actually, you may be used to one payment for if you're running, and not really realize, oh, I can actually go a little higher, have more of a cushion and more room on a monthly payment, that we can work those numbers, because now you have an asset that you own when you're owning your house as opposed to the rent. So when you're renting, and you maybe have a lower rent payment, you may say, okay, I don't want to pay as much to somebody else, and I'm not getting any benefit out of it. But when it's an asset, and it may be in a certain school system you want to be in a certain part of town, maybe somebody that wants to have 3 or 4 acres and have nobody around them. So depending on what your goals are, we can then look and say, okay, what is really our comfort level when we find a house? And you might be surprised that you may be willing and able to stress a little bit more than you realize to get that house that you really want. Because we can work with the numbers. We can't do anything about the taxes, but we can work with the numbers on the insurance to an extent, and we can look at some different scenarios to play the puzzle and work the puzzle to make it where it fits exactly to your situation. So the monthly payment is your interest rate based off of the loan amount for your house. Not the sales price, but it's based off of what the loan amount is after your down payment. That can include the principal interest, and then also the taxes and insurance. You've got the opportunity, if you go a conventional loan, to pay your taxes and insurance yourself. I personally recommend the idea of putting the taxes and insurance in your payment, because then it's paid every month, so when it's due next year, it's paid, you don't have to worry about it, as opposed to, but I hate to say this, I just bought a house last year and I decided to pay my taxes myself instead of having my payment. I got my insurance in my payment, and I was kicking myself back in November when all of a sudden I had to go write a check to the tax office for my property taxes when I should have just put it in my payment. I didn't have to worry about it each month. Well, at the end of the year when it's due, when Shane Foley sent the letter out that it's due, it was already in my mortgage payment. I'm paying it on 1/12 for the entire year. So that is what the tax and insurance are, and they are held in an account called an escrow account. So the escrow account is basically with the lender or the mortgage servicer that has your loan. They collect your taxes and insurance, and then at the time that your taxes are due, in most counties in Georgia, November 15th, they will send those in October so they're paid, so you don't have to worry about it. And then also they will do the same for you when your insurance is due with your insurance carrier. Then also there's a couple of different type of, first one I want to talk about is the government loans. That's FHA and VA. They are the most flexible as far as, and more for people that buying the first house or not looking to put a lot down for your down payment. Then there's also conventional. Conventional, a lot of times, somebody that has more money to put down, that has higher credit score, they may have a need for a certain loan amount. But I'll also tell you, I've also had some scenarios more in the last year or two where somebody could have gone conventional and put more money down, but their payment was not that much different by going to FHA and putting a little bit down. That we actually went the route of FHA because they were more focused on the monthly payment and keeping money in their pocket. So I said, okay, let's go this route. We can always refinance later. But we went FHA because they could put less money down and then they could keep the money in their pocket for doing other things. So I had a guy went FHA because he didn't tell me, but he decided that 2 weeks ago he got engaged to the house he just bought after he closed. So he didn't buy a wedding ring and plan for a wedding. So we went the FHA route to keep money in his pocket instead of putting all the money down toward buying a house. And then as far as the loan process, I already mentioned a little bit, getting pre-qualified. That is the first step. So getting pre-qualified, and then I get with Deena and Robin and we start discussing, and everything that I talk about with you all in the pre-qualification process is confidential in our conversation. I tell them enough to be, okay, here's the loan amount, here's what we're qualified for, but I'm not discussing the ins and outs of your financials. I'm not discussing what you make from an income standpoint, what your credit scenario is, whether it's good or bad. I may say, yeah, we got some things to work on, but I'm not. That is a confidentiality deal that what we're having a conversation about is between us to make sure that we're putting you in the position to figure out, okay, what is my payment goal, what are my assets that I have to down pay to the closing cost, and then we can get that pre-qualification. And then as far as gathering documents, I mentioned earlier, you can really think about it in two. So 2 month bank statements, 2 month bank statements, 2 year W-2s. If you just started working, we can get an offer letter, and then we can get your college transcripts, high school transcripts. So then, and then also doing a credit check. And what I do that a lot of folks do not do is I end up doing a soft pull credit report. I do not like the idea of pulling a hard pull credit report. Like a lot of car dealerships and a lot of other lenders, they'll try to pull a credit report and say, I've already pulled a credit report, don't go see anybody else, because you don't want to get your credit pulled more than you need to. In this market, any market, we may start the process and you may not find a house for 2 or 3 months, and then we'll close a month later, 4 months after we started the conversation. If I pull a hard pull credit report and it was 90 days ago, I have to pull another one. The last thing I want to do is pull a hard pull credit report more than I have to. So I do a soft pull credit report and not hit your credit. And then when the time comes, or you say, hey, let's go and put a hard pull credit report, then I will do so. But we're getting all those documents together, so now we have a real game plan. So when you're going to go look for a house, we know we have everything in order. So we want to make sure that when the listing agent calls me, or I call the listing agent on your behalf, I can tell them, hey, Robin and Deena submitted you an offer. This is a great offer, we can close in a couple of weeks. We're not having any hiccups. So I can help you give that listing agent the confidence that it's not just that one of them sent an offer in on your behalf, but I'm also on your team as well to make sure that we are all pushing and having the conversation. There's been some customers I've had, they look at my offer over others because we already had the conversation, and the agent was able to give some confidence to the seller that other things have been done as opposed to just a quick one. Then as far as making an offer, once we make an offer and we look at what our game plan is, what we're going to offer, what the sale price is going to be, what we're going to ask for closing costs, if we're going to ask for anything, we may not, but sometimes we do. Then the process is to get the paperwork going. So we have an initial documentation. It's all e-sign. That once we have an offer, we've got a property, then we sign everything e-sign, and then there's also basically an intent to proceed, and then a loan estimate. What is a loan estimate? A loan estimate is a breakdown of your closing costs and down payment that will determine whether you're putting 3% down, 100% financing, or you put it down 5, 10, 20%, or somewhere in between. It's the estimate of what the amount is that's going to be at closing. You're going to have the owner's money that Robin mentioned earlier, but you're also going to have the remaining, and that's going to be in there. But then we're also going to calculate in there what the seller is paying, so you can really try to see exactly what those numbers are. And I've got a relationship with all the local attorneys as well as others that if we're working with a particular attorney, I will call them and say, hey, I need your fees for this particular property, but I want to put those in exactly as close as I can, so we don't have any surprises. And all of a sudden somebody thinking, oh, I'm bringing this amount, and all of a sudden they want to hang up, bought a sofa and bought a TV and some other things, or a refrigerator, and then find out they got to bring a couple more $100 closing. So trying to avoid that as much as possible. So then you've got the processing, underwriting, pre-closing, and closing. I'm the broker owner of my office, but I'm also the loan originator, I'm also the processor. I do not like the idea, at some point I may do this, but I don't like the idea of passing a file off to somebody else. A lot of lenders and loan originators, they'll take the application, pass it to somebody else, and then they disappear. If something comes up, whether it's a long time away, if it's 11 o'clock at night, I'll get on the phone with you and have a conversation. The last thing I want you to do is go into bed worried about something that may not be that big a deal, but when you've not been in the process and don't know the process or learning the process, as we go, the more conversation and the more I can be in the know and in the conversation, so that if you call me, I know your file, I know what's going on. It is not, oh, let me go find out about this and that. So that is the process. And then underwriting, I work with different lenders. I have a handful of lenders I work with. I'm working directly with their underwriting team on your file. So when your file goes into underwriting, what that does is that's basically checking off everything that we have already talked about from a lender standpoint to make sure it's within the mortgage guidelines that we need with Fannie Mae and Freddie Mac to be able to make sure your loan meet the guidelines for a home loan. And I'm in conversation with them, and then we've got the pre-closing, which is the last piece of before closing. So we're getting everything together. I'm working with the attorney to make sure we're getting the closing packets. And then at that time, with most lenders, not all of them, most of them, all the documents that you sign initially, you're now going to sign those 70. It's not as crazy as you think. It can take about 10 minutes if you don't have a conversation point every page. But it's 15, 20 minutes, sign everything, and it actually makes it your official documents, official closing with the seller. Also there to sign their closing. And then that's when we get to the closing for you to get your keys, and now the home is yours. So really, as far as other professionals that are involved, we've got the loan originator with myself, and also I'm the processor. But then also the underwriter, which is that the lender I put your loan with, the title company is the attorney. Then you got the real estate agent, Rob and Deena, and then the appraiser, home inspection, insurance agent. So what I do is I'm gonna come quotes for you from an insurance standpoint, but I'll also use that because who do you have your car insurance with? If you have your car insurance with the same person that you have your homeowner's insurance with, they'll bundle it and give you a discount. So a lot of times I like to see, okay, what is the quote if you have your auto and your home? But also, if you already have a relationship with a insurance agent for your auto, I like to get a quote from them also, unless you say I just don't like the guy or I don't really have an agent. I just called, let's just say 800 Geico, and they just got me an automated system or one of those. I like to try to have a relationship, but if something comes up, you want to make sure you have that conversation. Also, as far as the appraisal and the home inspection, I like to wait. We like to go ahead and jump on the home inspection, as Robin mentioned, once you go into contract to see if anything, because you got to be diligent period. And then want to make sure nothing's going on with the home inspection. But also then, once I get a green light on the home inspection, I'm getting the appraisal ordered as quickly as possible. Right now, a lot of appraisals take 5 to 7 days to complete. I can usually dictate that with the appraisal management companies. I cannot talk to the appraiser. They can talk to them, they can talk to Robin, they cannot talk to me. If they talk to me, they notate on that they talk to me, and it can be all of a sudden that appraisal gets thrown out from a conversation standpoint. But also, so I like to do the appraisals after the home inspection. The last thing I want is the home inspection to come back and you back out of the deal. When we go back to market to find in the house and you got another appraisal you already paid for. But I want to make sure we move those things quickly so that everybody's involved. The attorney is the person that's going to be closing the loan for you. He or she can be the one that's going to be working with you to get the documents. And I'll be there 90% of the time if I can with you when you're signing. So if you have a question, we'll have that conversation. Also, as far as why you need a real estate agent. Real estate agent, very important. Because if you do not have a real estate agent, you're basically having to go out and you're having to go determine and have conversations with a seller or with a listing agent. And you need somebody in your corner that's representing you as a third party to be able to have the conversations. And I'll tell you, last week I had one that was up in Dallas, Georgia, Hardin County. The seller, we closed Wednesday morning at 10 o'clock, Tuesday night last week. The seller just decided, I'm gonna move my stuff out by Friday or Saturday. My borrower that's buying the house had somebody come in Thursday to put carpet down because they were closing at 10 o'clock on Wednesday morning. The realtor had to get on the phone with the listing agent to make sure that they understood and that they coordinated. We were on the phone until 10:20 Tuesday night to coordinate and make sure that the seller understood that he had to be out Wednesday. That's where a realtor comes into play, and those kind of things you don't think about that could come up. You need somebody in your corner that's going to help you in that process and say, hey, let me handle this. You take care of what we can take care of for the financing piece, and you can have the conversation because the listing agent working on behalf of the seller. you need somebody working on your behalf at the buyer. And that's where the realtors, between Deena and Robin, you're in good hands with them, that they can take care of that for you. Anything else?
Does anybody have any questions for Michael? Anything they want more explanation on, or maybe didn't quite understand? Well, y'all are so good, man. Okay.
Thank you, Michael.
All right, well, I'm gonna wrap this up real quick and get to my page. So I hope you understand how important it is that we're all on a team. It's real important. They make it look really easy on TV. We go look at 3 houses, you pick one, and 2 months later they come back and you have all this grand furniture and everything was great. But there are hiccups along the way, and there can be hiccups along the way. That's why it's real important that we all work together as a team. Michael's great. He calls me on the weekends. He's like, hey, do you got anybody I can talk to? And all this kind of stuff. So he is always available. He's fantastic. And Robin is too. Robin's a great agent. She spends a lot of time praying about her clients, and she's a great advocate for her clients as well. And we are an advocate for you. We want you to get the best deal. We want you to get the home that fits your family, your budget, everything. We're not here just to, get a quick paycheck and move on. We're here before the sale, at the sale, and after the sale. We want to, you guys are like family. We want to take care of each other and all of that kind of stuff. We try to protect your best interest as best we can through negotiating, purchase price, the inspections, all of this kind of stuff. We want you to make sure that when you do pick a property that it is a good fit for you. And we try to help you find the house that you're looking for as best we can. I always like to ask my clients, how do you feel like this house fits you on a scale of 1 to 10? If we're at an 8, then we're getting really close. There's not going to be a perfect 10. Even if you did new construction, you're still going to wish, oh, I wish I would have made this closet bigger, or this bathroom in a different place, or whatever. But if we're getting in the 8s of your wish list and all of that kind of stuff, then we're getting really, really close. And I think, like Robin said, you may take somebody and they see one house and they fall in love with it, and that's the one they want. We don't care how many houses that we take you guys to see. We want to make sure it's the right house for you. Not only your budget, but for your family and everything. Fits the majority of your needs. We also negotiate in the contract that we write up. We negotiate terms for you guys. Terms are like the purchase price, how much earnest money you're putting down. It's also like the due diligence period and all of that kind of stuff. So we try to work that to the best of our ability for you guys to win the house. Another thing was the due diligence. The due diligence is a period that protects your earnest money, but there's also another protection period that protects your earnest money, and it's your finance contingency, which is a little bit what Michael mentioned. That's usually a 21 to 28 day period. So for example, if we're out of due diligence, your earnest money is still protected with that finance contingency. So if anything happens, then say there's a hiccup on your credit, or you went and bought stuff and charged it, and now your debt to income ratio is out of whack and it won't work. So we can get a denial letter from Michael, and he will, give that denial letter to you based on what happened, and you will get your earnest money back. So we are fighting for you every step of the way throughout the contracts. There's a lot of behind the scenes negotiating that takes place with us and the other agent, as well as with us and the lender. And Michael's exactly right. He does not divulge confidential information to us. He has to do a background check every year, so he is held to a higher standard because he is dealing with your personal information. And so he's very protective of that, as he's supposed to be. And so he'll tell us what your budget range is, things like that are important of us writing up the contract. But aside from what you make or anything like that, we have no clue. and we don't want to know. We don't want to know. You know, if you tell us, then we know. But all that stuff is private. We don't want to be involved in any of that. But also the inspection. So we have several different inspectors that we use. There's one that we really, really love because he is so nitpicky. When you get an inspection done, you're like a 30, 45 page report of everything that's wrong. And it's majority of the time it's minor stuff, but most agents, the listing agents, don't want him because of how nitpicky he is. And so therefore we like to use him because we are fighting for you. I mean, you don't know inspectors and stuff like that, but we know how he is. And so we try to, you know, fight for you and all of that. If the inspection does come back that there's an issue or whatever, what we like to do is negotiate at that point of go over the report with you, figure out what your main things are that you want to focus on, that you want the seller to fix, repair, or take money off. And so we try to, you know, get all that negotiated so you guys are happy with your purchase, that they fixed this or they've taken money off, those type things, okay? Robin and I, like she mentioned, we are full-time agents. We've closed 49 properties last year, and we talk to buyers and sellers all the time. So sometimes we also learn of off-market properties that haven't hit the market yet that might be a good fit for you guys. So it is real important to have an agent that fights for you, that's going to look for your best interest, and make sure that the T's are crossed and the I's are dotted so that you can get to the closing table with as little hiccups as possible. There will be things along the way that you get frustrated, and maybe you like it at the lender because, oh my gosh, he's asking for one more document. How many more times does he have to have the same document? You know, those kind of things. But we have your best interest at heart. We want you to get the house that you want and close in a timely manner, what works for your family and all of that kind of stuff. So, do you guys have any questions for me?